Hi, it's the 30th of September and welcome to today's tax update. Our tax update for this month will focus on local and international developments of September 2020. Let's have a closer look at these developments. Many changes have been introduced with the recent amendment to the Assessment and Collection of Taxes law, so we have asked Michalis Michalidis, Director in our Business Tax Department, to analyze a few of the most important changes. Michalis?
Gary, thank you for the introduction. In the next couple of minutes, I will cover three of the most important changes. First and foremost, from tax year 2020, almost all individuals earning taxable income, irrespective of the amount, will be required to submit a personal income tax return. Up until 2019, individuals with gross taxable income not exceeding 19,500 euros were not required to submit a tax return. From 2020, such individuals will be required to submit a tax return unless they meet certain conditions which would exempt them from such obligation. A decree is expected to be issued that will define the conditions for exemption. Another important change is the regulation of submitting revised income tax returns. Prior to the amendment, this matter was not regulated. Following the amendment, a revised tax return can be submitted within 3 years from the submission deadline of the relevant tax return. However, tax returns for which the submission deadline for a revised return has already passed will need to be submitted the latest by the 19th of February 2021. Finally, new provisions have been introduced, making it mandatory for certain businesses, which will be specified in a decree, to accept credit card payments. These businesses will need to have in place the appropriate equipment. Non-compliance may be fined, with penalties reaching a maximum of 2,000 euros. Following the above, it is evident that the tax authorities are introducing new measures to improve tax compliance and to enhance the government's ability to collect taxes.
Thank you, Michalis. Following on to our next development, the Tax Department has announced a change in the way that the interest is calculated for late payments of special defense contribution, capital gains, and immovable property tax. Interest is now calculated on the basis of completed months for which the payment of the tax is delayed and not on a daily basis. This applies to taxes due on or after the 1st of September 2020. It was about time that the tax office realized that their practice to calculate interest on a daily basis for these taxes was not in accordance with the provisions of the law, which provided for interest to be calculated on a complete month basis. We welcome this change. Moving on to our next development, as from the 1st of September 2020, the Tax Department allows the electronic payment of all taxes, including overdue taxes, via two means, the tax portal and the JCC Smart Portal. It should be noted that payments for taxes that are made on time can be made via both portals, whereas payments for overdue taxes can only be made via the tax portal. Physical payments at the cashiers will be accepted by exception only, where online payments cannot be carried out, such as payments for immovable property taxes. Our last local development is an announcement that has recently been made in relation to the refund of tax or VAT. Any taxpayer in a refund position will not be eligible for a refund if they have failed to file their tax returns in accordance with the deadlines set in the relevant laws. Thus, requests for refunds in such cases will be rejected, and once a taxpayer is up to date with the filing of their tax returns, a new request needs to be submitted. We will now have a look at some tax treaty developments. On the 8th of September, Cyprus and Russia signed an amending protocol to the existing provisions of the Cyprus-Russia tax treaty. The existing withholding tax rate on dividends and interest payments made from Russia to Cyprus will increase to 15%, subject to certain exceptions. The new withholding tax on royalty payments from Russia to Cyprus will not change. The provisions of the protocol are expected to apply from 1 January 2021 and shall enter into force after the completion of the relevant procedures required by the domestic laws of the contracting states. For more information, please refer to our tax alert. We will close off today's tax update with a brief reminder of the deadlines coming up. The 30th of October is the deadline for the submission of the tax returns by employees and self-employed individuals who do not prepare financial statements for 2019. This concludes our tax update for this month. Thank you for watching.